Hi, this is Brian Mahone. Thanks for finding this presentation. I'm a commercial insurance broker and certified insurance counselor in the state of Maryland. I focus specifically on innovative technology and life science companies. And today we're going to go through a 15 or 20-minute presentation on the top risks that these types of companies face. Recording this during the COVID-19 pandemic, so pardon the kitchen in the background. But I'll go ahead and share my screen with you all and get going here. So, what is innovative insurance, and the top risks that innovative technology and life science companies face? A little bit about me. Every day, um, businesses become more reliant on technology and kind of that gray area, that mesh between just a regular business and a tech or a technology company is becoming grayer and grayer. So when I say technology, I mean IT service companies and MSPs and software and app developers and federal government contractors that are building technology solutions for the Department of Defense. Technology consultants. On the life science side, I mean anyone doing clinical trials, clinical research organizations, contract manufacturers, pharmaceuticals, biotech, medical device. There's also kind of another area that I like to call just, innovation and those companies on the cutting edge, things like, you know, blockchain technology and Bitcoin and medical marijuana and medical technology and the Internet of Things, those also get wrapped up in technology and life science. So the first thing really that any business encounters in terms of risk and insurance is the basics. You know, I often joke there's two types of insurance. The insurance you need to just get in the door and comply with a contract, and the insurance that's actually going to cover you for property and financial loss. So you might have heard of a BOP or a business owner's package or a commercial package. Usually consists of some basic general liability and property damage to comply with, like a landlord or a commercial lease, or maybe a co-working space like a WeWork. Those, anybody can really handle. It's maybe a few $100 a year, maybe a couple $1,000s a year if you've got some computers and equipment. When you start getting into signing contracts with customers, the workers' comp and the hired and non-owned auto liability definitely comes into play. And all of this coverage is bodily injury and property damage. So if your company, has a customer that gets injured, or your product has some sort of flaw and there's a lawsuit, or you damage someone else's property, that's what general liability and general business insurance is for. It also, has personal injury protection if you for some reason come into an issue with false arrest or imprisonment or wrongful eviction or malicious prosecution, some advertising injury if you're infringing on another company's copyrights or slogans, slander or libel. So most people don't know any of that, and they just see one of these white forms that's requested. And in Accord Form 25, a certificate of liability insurance, on the top left hand, there's your agent, your broker, and your company, and you've got some coverages here. And maybe it's your customer or vendor or landlord or some sort of third party that wants one of these from you. And that's smart that they're asking you for that. They want to make sure, if there is an issue in working with you, that you have some basic insurance. But really, in terms of technology and life science companies, that cyber insurance is a huge concern. And I think this video, might be not safe for work for some employers, but I found it to be one of the most entertaining and educational cyber insurance videos out there. It's definitely not an endorsement for this Evolve company, but it's a good video. So that's cyber. Just kidding. Um, but seriously, the video outlines it pretty well. But a lot of people can relate. If there's a flood in their house, they know they need to call a restoration company, get the water removed, get the carpet ripped out, maybe get rid of some mold, new carpet in there. It's similar to a data breach. You know, the data breach, a business doesn't necessarily really know exactly who to call. There's not really a roto-rooter yet of cyber insurance or data breaches. Um, so all you're really doing when you buy a cyber insurance policy is, one, you're getting those post-breach services. The law firms and the data forensics people and the public relations firms and the credit monitoring companies. Insurance carriers already have those all at your disposal for being a policyholder. You're also getting pre-breach services, or should be getting pre-breach services. So things that come with your insurance policy, but happen before there's actually a data breach. There might be data breach response planning tools, or ways to calculate the likelihood and the severity of a data breach specific to your company. Phishing training and cybersecurity training for your employees, and best practices. But when it comes to the actual exposure, um, top two causes of loss here are those phishing, social engineering, cybercrime type of situations where an employee or a financial controller clicks on a link, and a bad actor or a hacker is able to get into your system and potentially extort someone in your company to wire funds overseas. I've seen that happen with insureds. Or they get into your system and just lock the whole thing down and say, hey, wire us $500,000 of Bitcoin overnight, we'll unlock your data for you. So data breaches are 70% going to be first party, meaning they're going to affect the company who owns the cyber insurance. It's going to pay for them to get back up and running, protect their reputation, maybe pay some fines and penalties, and those forensics costs, figure out what happened. About a third of claims are going to be third party in nature. So the company who owns the cyber insurance policy, vendors or customers or third parties, you became responsible for a data breach, and your customer, vendor, third parties pointing the finger at you, saying, hey, we're having a financial loss because of this. So some considerations when you're looking at this is, do you have say in choice of legal counsel? Some companies have a lawyer they like to use. For every situation, they have maybe a GC in-house. A lot of insurance carriers won't necessarily let you use them, and that's laid out in the terms of the policy. A lot of policies also exclude that phishing cybercrime coverage, where they sub-limit it. You might have $1 million cyber insurance policy, but you only have $250,000 worth of cybercrime. There's another component that has a few different names, kind of content liability, or web publishing liability, or multimedia liability, that kind of provides a digital world personal and advertising injury liability coverage that can include, another company's copyright or slogan trademark infringement, trade name, trade dress, using unauthorized images or music on your websites, kind of takes that general liability, personal advertising injury liability, and brings it to the 21st century. So why would you consider it? I mean, applying, really, they ask a ton of questions about kind of the ramifications and procedures and protocol that you have in place to mitigate and avoid some sort of data breach. Do you have outgoing payments for dual factor authentication? Are employees doing training to spot phishing activity? Are systems backed up regularly and updated? Do you have some sort of security audit from an IT firm? You have a CTO, as Chief Technology Officer, Chief Information Officer? If so, what's their experience? So just applying for this coverage, you can really learn a lot and gain value out of it. Number two, I mean, you're not covered. Data breaches, are a 21st century problem. Really, the insurance industry has only been covering this and providing coverage for it for about 10 or 20 years. Compare that to, general liability and homeowners and auto insurance. That stuff's been around for 200 years. So a lot of businesses think they might already have insurance for this, but odds are they don't. Like I said too, it's been around 25 years now. The cost has come down considerably from the late 90s and early 2000s. So you might be surprised that, if you're a small technology company, you might be able to get $1 million of cyber insurance for, I don't know, $1,000 to $5,000 or so annually. It's rated off sales, so it's tough to really throw a number out there, but it's probably less than you think it would be. And it's required by law. I mean, there's a ton of different laws. Europe's got GDPR that was in the news not too long ago. I mean, the U.S. doesn't have an exact similar law, but pretty much all 50 states have enacted some sort of legislation that requires, private or governmental entities to notify individuals of security breaches in a timely manner. Usually have provisions on the types of companies that have to do this, the sizes, the types of data, if it's personal identifiable information like social security numbers or driver's license numbers, or, these state laws also kind of constitute what a breach even is, requirements of notifying, 30 days, 10 days, whatever. There's HIPAA, there's the Health Information Technology for Economic and Clinical Health Act, the High Tech Act. So it's required by law, but quote unquote required. Required by contract, it could be in the government contracting space and subcontracting with IT companies. There might be some requirements that you have to carry some minimum type of cyber insurance. A lot of the bigger companies out there, like Google and Amazon, they're definitely going to for this. Smaller companies might not necessarily be making that a requirement for their subcontractors, and their prime contractors might not necessarily make them have cyber insurance, but it's coming. And then of course accidents happen. I mean, human error is often the number one cause of data breaches for companies. Reportedly the Equifax huge data breach was because an employee didn't properly patch a software, so an error. And then this Have I Been Pawned site, that's pretty cool. You can put your email address in there and see if your email address is out on the dark web for sale. I'm not going to do it right now, but that's a free website and is often fun to do. So moving on, we talked about just general business insurance, cyber insurance. The second huge item that a lot of companies overlook is employment practices liability insurance. I like to joke and say, it's the HR manager's best friend, but it covers areas to do with paying and employees, wrongful hiring, wrongful firing, harassment, sexual harassment, discrimination. I'm sure you've heard of the Me Too movement. These were just some quick headlines that I found out there at the beginning of this year. McDonald's, Google. I mean, you can look up your local businesses. I'm sure there's some sort of harassment lawsuit in the last 3 to 6 months in your local town, your local newspaper. And really, you can get insurance for this, but it's better just to do training, or best to do both. So some states have actually made anti-harassment training mandatory. California, Connecticut, Delaware, New York all have different types of requirements. Seems like most of them are every 2 years. New York is every year for managers and employees. Employers can't be negligent to the fact if one of these issues comes up and in court or through an insurance litigation process or mediation, the question comes up, well, did the employee or manager receive any training on this? And the answer is no. It's not going to look good, especially if you're in one of these 4 states. So employment practices is often within a management liability program or is sold alongside directors and officers insurance. Or you can get a little bit of it in a business owner's package or a commercial package, but this is a growing concern for sure. So the EEOC, had almost 100,000 cases in 2018, about $500 million worth. 40% were against private companies with less than 100 employees, and average cost 75 grand to settle out of court. Average jury award for an employment-related case was $250,000 almost, and these things go on for months and months and eat up a lot of time for executives. What I've seen from my personal experience is a lot of you see these billboards driving around on highways all over the country. Oh, if you've been injured, call this 1-800-LAW number. Lawyers are really willing to pick up these types of suits and settle them for 10, 20, 30 grand and just make some quick money off of them. It's not much time and effort. They literally will send a letter to an employer on behalf of an employee saying, hey, submit this to your EPL insurer because they know they can get paid. So obviously the goal of having this insurance in place and caring about this is if something does happen, to keep the costs low, to keep it out of court, and to move on and get it over with and deal with the disgruntled employee. I start recommending this type of coverage for a company that has 10 to 12 employees, and really the more employees, the more exposure. One other thing I wanted to mention about EPL is what's really nice about having it is the claim from the unhappy employee doesn't really have to be true. It can be baseless in nature, and you'll still have coverage to investigate it and protect yourself. So even if it's some fraudulent claims from some employee that's just off their rocker, it still provides value. One other area for technology and life science companies is directors and officers insurance. So, a lot of these innovative companies are out there doing something different, and they're often looking for outside funding past family and friends. And once they get into this seed investment in Series A and go on from there, usually when an investment is made, the board of directors is switched up, some requirements to have some of those investors on the board. A lot of those investors are going to be unwilling to invest in companies who don't agree to have some sort of directors and officers insurance in place. So D&O very quickly just has 3 coverages. Side A is personal coverage for a director and or officer against a suit if a company fails to provide indemnification. Say your startup goes out of business or doesn't have any money or something like that. The actual individuals are still protected. The second coverage, side B, is company coverage. For a director or officer, indemnification is being provided by the company. So it's kind of both of them at the same time. And then side C is for direct claims against the company where, individual CFOs and CEOs and D&Os aren't really named. So this last slide could definitely be expanded upon, but for the sake of time, I wanted to consolidate it. But more just your overall operations, there's a lot of things you can do. Number one, before any insurance, is really contract risk management, and it's tough because I see a lot of smaller technology and life science companies often get bullied in some contractual language. Life science companies are often working with some university or some big pharma company, or technology companies might be providing or reselling products from the Googles and Amazons of the world. So, companies have tons of general counsels and lawyers on staff, and they have different versions of contracts, and they're going to give you the most advantageous contract for them first. And you have to be able to go back and redline it and negotiate and try to get some favorable terms out of those. So looking at commercial leases from landlords or research collaboration agreements in life science, or master service agreements for MSPs and IT service companies, or prime and subcontracts and government contracting, and seeing if there's any warranties or guarantees in your standard of performance for your technology, service, or product, like service interruptions or completion time. Looking at clauses like those, hold harmless agreements, indemnity agreements. Does your contract say you guarantee no security vulnerabilities, or that you'll prevent security breaches or transfer malicious code? I hope not. What percent of the time are you using a contract? What percent of the time is it modified? Do you limit your liability to a certain dollar amount in a contract? Do you get a customer signature on each phase of a new project? Do you have a quality control program? Are you seeking advice on contracts from legal counsel and insurance counsel? And and going back to subcontractors, back to that Accord 25, that general liability certificate we looked at, are you asking your subcontractors for those certificates, and not just getting them for your landlord and your third parties, but going down the chain to subcontractors, keeping them on file, making sure they're covered, and you update those every year? Is that process automated? The third thing is more along the lines of business continuation and possibly a shotgun clause. Shotgun clause is a special provision that's usually used in a partnership it forces a partner to sell their stake or buy out an offering partner. So it's kind of a form of dispute resolution and a pricing mechanism. Usually it's used to force a partner or partners into either buying out an offering partner or selling their shares to an offering partner. It's um, often the nickname for a shotgun clause could be a buy-sell agreement. And there's also kind of insurance that can back this up. Key person life insurance that can fund a disability or a death to replace a key person. Also provide funds to cover overhead or continued operating expenses while you find that replacement. Can provide benefits to that key person's spouse or facilitate share purchases. Often in technology and life science ventures, it might be the owner, the founder, some sort of lead scientist or top computer programmer. It could even be a top salesperson. Really, it's the person that has that intellectual property and that secret sauce locked up in their brain. And without them, or without them for a period of time, there would be no business. So it's something that a lot of businesses don't think about until it's too late, or don't think about it until they're way down the road. But really, it's nice to think about that up front. The last couple points here I had was on human resources. I see a lot of technology and life science companies. They kind of try to keep one person on the payroll that kind of does finance and admin and back office, and that's great to not inflate your payroll and get by, and pay your bills and do basic HR. But really, once you get going, I mean, you want to have formal background checks in place, an employee handbook. If you don't have an HR director, you might consider utilizing an HR information system or HR portal that can get you things like those mandatory labor posters you see up in break rooms all over the country, and best practices on hiring and firing and interviewing, and also have the ability to ask an HR expert. Say an employee comes in drunk or high, and your current HR staff's not really sure how the best approach that situation. You can utilize your HR portal or your HR technology and submit a question. Say, hey, how do we deal with this? A lot of companies too will use what's called a PEO, a professional employment organization like ADP or Insperity or TriNet, and that's a really, really good solution for workers' compensation and streamlining that payroll, but really it lacks in one key area, and that goes back to the employment practices liability. There, if any fuzzy situation comes up with wrongful hiring, wrongful firing, harassment, sexual harassment, things of that nature, your PEO is not going to help you with that. So I hope you found this helpful. I believe that's all I have for you. I can be reached, all over the internet at Brian M. Mahone, and I wish you well.